Welcome to CodeNinja 100X Workplace podcast. Today we're taking a deep dive into a really interesting piece. It's an article by Aatif Awan, who's the founder and managing partner at Indus Valley Capital. And it's titled, "The Pakistan Upside No One is Pricing In."
Yeah, you shared this one, and what really struck me was Awan's focus. He's looking at these really fundamental long-term shifts.
Right.
It's not just about, the next quarter or short-term blips. He's looking at these big global trends and thinking, how could this specifically play out for Pakistan? It's that kind of thinking that often spots opportunities others miss.
Absolutely. So our mission today really is to unpack his arguments. We want to look at the structural changes he's highlighting, especially energy, demographics, and AI,
Those three pillars, yeah.
and figure out why he thinks Pakistan has this, well, significant economic potential that maybe isn't getting the attention it deserves.
Right.
So we'll walk through the long-term stuff he sees, the sort of medium-term hurdles.
The challenges, definitely.
The challenges, exactly. And then touch on some of the positive short-term signs that are actually happening right now.
Okay, so should we dive into that long-term vision first, looking out to, say, 2030 and beyond?
Yeah, let's do that. Because he makes this case that Pakistan might actually be positioned surprisingly well compared to other emerging markets, partly because of these huge global shifts happening.
It's interesting how interconnected they are in his view. It's not just energy or demographics or AI in silos, is it?
Exactly. He argues they're kind of converging, creating this unique tailwind, specifically for Pakistan. You know, it makes you think how often we just look at one factor without seeing the bigger synergy.
Okay, let's start with energy then, because, historically that's been a massive headache for Pakistan, right? Super reliant on imported oil, vulnerable to price swings. Awan talks about this.
He does, and he emphasizes this idea of the end of oil dominance, basically. He points to projections, I think Bloomberg NEF, saying global oil demand probably peaks around 2027.
Is that soon? Wow. Yeah, quite soon. And then starts a pretty sharp decline, mostly because of EV adoption, electric vehicles taking off. He mentions like a 6 million barrels per day drop by 2030 and maybe 20 million barrels per day by 2040.
6 million barrels.
Yeah.
That's huge. What's that comparable to?
Well, just to give a sense of scale, 6 million barrels a day is roughly what Japan uses right now, the entire country.
Okay, so for Pakistan, which spends so much on fuel imports, that kind of global shift could be game-changing.
Absolutely transformative. Awan highlights they've been spending like $15 billion a year on average on fuel imports. That's what, over 4% of their GDP?
Yeah.
So he argues that, within maybe a decade, partly because of this global oil decline, but also because of their own shift towards solar and EVs, that bill could shrink dramatically, maybe fall below 2% of GDP.
Imagine freeing up that cash.
Yeah.
Billions of dollars.
Exactly. Think about what that capital could do if it's reinvested. Infrastructure, education, new industries. It's huge potential.
And you mentioned solar. The numbers he quotes for Pakistan's solar adoption are kind of eye-popping. 17 gigawatts of panels imported in 2024, making them the sixth largest market.
Yes, 17 gigawatts. And he stresses this isn't mainly, government subsidies pushing it. It seems to be driven by sheer necessity, people facing high electricity bills, an unreliable grid.
So it's a bottom-up thing.
Seems like it. Real economic drivers. And the fact that net metering customers, people putting solar on their roofs and selling excess back, jumped 25% in just the last 2 months of 2024. That really shows the speed, doesn't it?
It does. And he makes an interesting point that even if they reduce the payouts for that net metering, it might just push people towards batteries faster, since battery costs are also falling.
Right. It could inadvertently accelerate battery storage adoption. You sort of solve one problem, grid instability or costs, and it pushes innovation in another area. It's quite dynamic.
Okay, and the EV story there, it's not really about cars yet, is it? It's motorbikes.
Mostly motorbikes, yeah. He says there are something like 25 million motorbikes in the country. Over half of all households own one. It's massive.
And electric motorbikes, especially with things like battery swapping, could offer big savings.
That's the idea. Awan mentions potential savings of over 30% on running costs, based on some early trials. He points to India, actually, where electric two-wheelers and rickshaws really took off in 2024, alongside this boom in battery swapping stations.
Ah, like Battery Smart in India.
Exactly, models like that. So given the economic pressures in Pakistan and cheaper batteries, he thinks electric motorbikes could see a similar, maybe even faster boom. Think what that means for millions of families, lower transport costs every day.
So you put that together, cheaper homegrown solar power and this shift to electric motorbikes, that could really boost Pakistani industry, which has always struggled with energy costs.
That's the potential Awan sees. Cheaper energy helps households, sure, but it also makes industries way more competitive globally, could boost exports, create jobs, and decentralized solar might even bring more remote areas into the formal economy.
Okay, fascinating. Let's shift gears then. The second big long-term driver he talks about is demographics.
Right. And this is where Pakistan really stands out, especially when you look globally.
Because so many big economies are facing aging populations, shrinking workforces.
Exactly. Awan points out like over 60 countries are actually projected to see their population shrink. Europe, maybe 100 million fewer working age people by 2050. China's decline is even more stark, potentially losing 241 million.
Wow, 241 million.
Yeah. Even the U.S. is only projected to add about 8 million net working age people. But Pakistan, they're expected to add a massive 89 million people to that working age group by 2050.
89 million.
Yeah.
That's more than the rest of the world combined, excluding Africa.
That's what A1 states. Yeah. More than the rest of the world combined, excluding Africa. And about 2/3 of the increase projected for India, even though India is obviously much bigger today. It's a huge demographic wave.
So while the rest of the world is worrying about finding young workers, Pakistan will have this abundance. But he does add a caveat, doesn't he? This demographic dividend isn't automatic.
No, absolutely not. It's potential. Pakistan is set to hit that sweet spot probably in the 2030s, where the dependency ratio, the number of non-workers per worker, falls quite low. That can fuel faster growth.
If they make the right investments now.
Exactly. It hinges completely on investing heavily right now in things like health, education, and actually creating good jobs for all those young people entering the workforce. Otherwise, it could become a burden, not a dividend.
And he also mentions the diaspora. Remittances are still a big factor.
A huge factor. $33 billion in remittances in 2024, he says. And that's been growing consistently around 7% a year for the last decade, faster than GDP. It provides a really crucial buffer for their balance of payments, a sort of economic shock absorber.
Okay, energy, demographics. And the third big one is AI, artificial intelligence. He sees this as an equalizer.
Yeah, an equalizer. His argument is basically that low-cost, powerful AI tools will kind of raise the floor for everyone. They'll boost baseline capabilities and help narrow those big productivity gaps between richer and poorer countries.
And for Pakistan, with that...
That's a key part of his argument. Imagine AI-driven educational apps, personalized learning, maybe costing less than $1 a month per child. That could massively scale up access to decent education.
Which is critical given the number of kids out of school.
Absolutely. And similarly in healthcare. AI platforms could provide basic medical advice, help with diagnostics, push preventative care, especially reaching remote areas where doctors are scarce. Huge potential public health impact.
Beyond those social sectors, he sees AI boosting productivity pretty much everywhere else too. Farming, logistics, small businesses.
Yeah, across the board. Optimizing agriculture, making logistics smoother, helping small businesses formalize and grow, improving government services, making Pakistani workers more competitive in the global gig economy. And he does point out they already have a decent base of tech talent.
Like software engineers, GitHub accounts.
Right, estimated 450,000 software engineers, 1.5 million GitHub accounts, and a growing number of Pakistani founders actually building AI startups themselves. He mentions a few names.
So AI isn't just a potential boost, it's maybe a way to leapfrog.
That's the compelling idea. AI could help Pakistan bridge that productivity gap much faster than, say, traditional industrial development allowed. The main risk he flags, though, is just being too slow to adopt it. Hesitation could mean missing the boat.
Okay, so that long-term picture, energy transition, demographics, AI sounds, well, incredibly promising. But Awan is realistic. He lays out some pretty significant medium-term challenges, too, things that need tackling between now and, say, 2030.
Yeah, these are the big ifs, aren't they? The hurdles they absolutely have to clear to make that long-term vision a reality. Top of the list, probably, is energy reform. Real reform, not just tinkering.
Going beyond the short-term fixes.
Exactly. He talks about needing to fundamentally restructure the sector. That could mean tough things like renegotiating those old contracts with independent power producers, the IPPs.
Those long-term power purchase agreements.
Right. Plus, modernizing the grid, the transmission lines, which are bluntly quite leaky and inefficient, and really pushing EV adoption, energy-efficient appliances. He even suggests maybe liberalizing the power market like they did with telecom.
Breaking up the monopolies, allowing private players in buying and selling power.
Potentially, similar to how opening up the telecom market led to much better service and lower prices. It's an interesting analogy.
Then there's a perennial issue, political stability and security.
Absolutely fundamental. You need that stability, that broad consensus on national priorities to give investors confidence. Without it, it's hard to attract the long-term capital needed.
And the human capital crisis he mentioned.
Yeah, that's critical. Over 20 million kids out of school, high infant mortality, malnutrition. You can't cash in a demographic dividend if your workforce isn't healthy and educated. So aggressive investment there, using tech to scale solutions, is vital.
What about the economy itself? Exports, investment?
Diversification is key, moving beyond just relying on textiles and basic agriculture. He points to growth sectors like AI tech services, EV manufacturing, higher value food production, but attracting real foreign direct investment, FDI, into those areas needs, again, regulatory certainty, transparent governance.
It sounds like a lot hinges on leadership, too.
He specifically calls out the need for a generational shift. Younger leaders in politics, business, public sector who are more globally connected, understand tech, understand the aspirations of that huge young population.
And avoiding reform fatigue, making sure good policies stick.
Yeah, that's crucial. Pakistan has a history of starting reforms and then losing momentum or reversing course when politics shift. Getting multi-party buy-in for the really critical economic reforms is essential to make them sustainable.
So those are definitely big challenges. But amidst all that, Awan does point to some surprisingly positive short-term economic signs right now in 2025.
Yes, and this is perhaps the most immediate good news. It feels like, for the first time in a while, Pakistan has a bit of macroeconomic breathing room. Look at inflation.
It's come down dramatically, hasn't it?
Dramatically. From, 24% at the start of 2024 down to around 1.5% recently. He says that's the lowest in a decade. And way better than, say, Egypt or Nigeria or Turkey right now.
And that drop in inflation has allowed the central bank to start cutting interest rates.
Exactly. The state bank cut the key rate from a peak of 22% down to 12%, which should help businesses borrow and invest, help consumers a bit. And importantly, the real interest rate, the rate minus inflation, is still strongly positive, around 10.5%.
Which means they might have room for more cuts if needed.
Potentially, yeah. There's still a buffer there. And look at the current account, the balance of trade and financial flows. It swung from a $1.7 billion deficit to a $690 million surplus in this fiscal year.
What drove that turnaround?
A mix of things, according to Awan. Stronger remittances, rising IT exports, but also controlling imports and cracking down on smuggling activities.
And the currency, the rupee, has been stable.
Remarkably stable against the U.S. dollar, yeah. Kept within about a 3% range for the last 18 months or so. That kind of stability is really helpful for planning and confidence.
Okay, and the stock market, that's been on a tear.
Absolutely. The KSE 100 index, he says, has doubled year on year and nearly tripled in U.S. dollar terms over the last 2 years, making it like one of the world's best performing markets recently.
So putting it all together, Aatif Awan makes this really compelling case, doesn't he, for Pakistan's long-term potential being quite significant, driven by these big global shifts in energy, demographics, and AI.
Yeah, a unique confluence of factors, potentially.
But, and it's a big but, realizing that potential depends heavily on tackling those serious medium-term challenges, the reforms, the stability, the human capital. Though these recent positive macro signs, they at least offer a better foundation to build on than they've had for a while.
Definitely. For you, the learner listening in, this analysis from On hopefully provides a different lens. It highlights a market with perhaps significant untapped potential, a story that's often drowned out by the focus on, say, India or Vietnam. The way these big trends, energy, demographics, AI, could align for Pakistan suggests its future path might be surprisingly strong if they play their cards right.
It really leaves you with that big question, doesn't it? Will Pakistan manage to grab this window of opportunity? Can they push through the structural changes needed to really harness these long-term tailwinds? It's definitely a story still unfolding and one worth keeping a close eye on, I think.
What stands out to you listening as the most critical factor here? What's the linchpin for Pakistan's potential transformation? And what other questions does this deep dive spark for you?